Have you ever been in that spot where you just need to get up to speed on something complex? Maybe for work or, just to feel like you really get it. But you're just swimming in way too much information. And you kind of wish someone could just, I don't know, boil it down for you. Well, you've definitely come to the right place today. We're doing a deep dive into something pretty critical in finance and auditing, but maybe not always front of mind. How auditors actually use the work of specialists, our mission. Basically, to unpack why these experts are so important for accurate audits, what auditors need to know when they bring them in, and why it's also crucial for financial integrity. Think of it as your shortcut to getting informed on this key topic. Okay, let's unpack this. And actually, before we dive deeper, just a quick reminder. This deep dive is based on material from Farhat lectures. All the content, the examples, everything we're talking about today, it's all derived from the great accounting resources over at farhatlectures.com. So whether you're maybe an accounting student studying for the CPA exam or already a professional, you should definitely visit the website for more practice questions, video lectures, and, support on today's topic and many others. A really big thank you to Professor Farhat for providing such valuable material for us to discuss. Okay, so let's start at the beginning. The baseline rule is auditors need a good enough understanding of their client's business, right? That feels like step one.
Exactly. That's fundamental. You can't audit what you don't understand, basically.
Yeah.
It's essential just to even plan the audit properly. But here's the thing. Even with that solid understanding, sometimes the audit requires, well, really specialized knowledge. The kind a typical CPA firm just might not have in-house. And that's where the specialists come in. It's really about filling a specific knowledge gap to get that precision you need.
Here's where it gets really interesting because, like you said, auditors handle a lot, but businesses are complex. So what are some real-world examples from the material where you absolutely need a specialist?
Oh, yeah, the source gives some great ones. Think about valuing inventory like, say, diamonds.
Diamonds, wow, okay.
Yeah, you'd need a diamond expert, right?
Yeah.
Someone who can properly value them, figure out replacement costs. An auditor usually can't do that.
Makes total sense. What else?
Or an actuary.
Mm-hmm.
The math whizzes who deal with risk, especially for insurance companies.
Right, for calculating potential losses and stuff.
Exactly. Assessing if those insurance loss reserves, the money set aside for future claims, are appropriate. That's highly technical. Now, the material does mention that some big CPA firms might have their own actuaries on staff, which is interesting.
Oh, really?
Yeah. But if not, you definitely need an outside specialist. And there's even a little side note suggesting CPAs who are, really good with advanced math might think about taking actuarial exams. It's a specialized skill.
Huh. Never thought of that combo.
Oh.
Okay, any other examples?
Sure. Attorneys are another one.
Huh.
For interpreting maybe complex legal contracts or property titles or even helping value a business in a sale.
Legal stuff, right.
And think about tech. If you're auditing an engineering firm, especially one doing complex software projects, you might need a software engineer to help figure out how complete a project is. That directly impacts how revenue gets booked.
Huh.
You need an expert to say, is this 30% done or 50%?
Gotcha. So who usually hires these people? Is it the auditor or the company being audited?
It can be any of those, actually.
Yeah.
The source material points out they might be employed by the client themselves, which raises some interesting points we should probably talk about.
Huh.
Or they could be hired by the auditing firm, maybe even be on staff like those actuaries we mentioned. Or they could just be a completely independent third party brought in just for that specific audit task.
Okay, so they bring in these experts, but it's not like the auditor just washes their hands of it, right? What are the auditor's actual responsibilities here? They must have some oversight.
Oh, absolutely. You're spot on. The auditing standards are very clear on this. The auditor has definite responsibilities both in choosing the specialist and in reviewing their work. It doesn't matter who hired them.
So what specifically does the auditor need to do?
Well, first off, they have to evaluate these specialists' professional qualifications. Are they actually competent?
How do they do that? Check credentials.
Exactly. Check certifications, like has the actuary passed their exams? Look at their experience, their reputation, maybe even check references. You can't just grab, anyone off the street. It needs proper vetting.
Okay. Diligence. What else?
Second, the auditor needs to understand the objectives and the scope of the specialist's work. Like, what exactly is a specialist being asked to do? What are the boundaries of their task? This needs to be clearly agreed upon.
Makes sense. Define the job.
And third, and this is really important, the auditor must understand the relationship between the client and the specialist, especially if the specialist works for the client.
Why is that so critical? Independence issues.
Precisely.
Yeah.
What's fascinating here is that relationship piece. If the specialist is employed by the client or has some other close tie, their objectivity could be impaired. And independence, as you know, is like the cornerstone of auditing.
Yeah.
So anything that even might compromise the specialist's objectivity needs very careful assessment by the auditor.
Okay, so check qualifications, define the scope, check for conflicts or relationship issues.
Right. And maybe the most crucial point of all, something auditors really need to internalize. Using a specialist does not reduce the auditor's own responsibility for the final audit opinion.
Ah, okay. That's huge.
It is. The specialist is basically part of the audit team, helping gather evidence, but the auditor is the one signing off on the overall opinion. The auditor absolutely cannot say, well, the specialist gave me this number, so if it's wrong, it's on them. No. The buck stops firmly with the auditor. They own the final opinion.
Okay, that's crystal clear. The auditor carries the ultimate weight. So then let's talk about the report itself. The final audit report that goes public. When does the auditor actually mention they used a specialist? Is it standard practice?
Good question. Normally, no. If the auditor issues what's called an unqualified opinion, that's the clean one, saying the financials look fair.
The standard good report.
Exactly. In that case, they typically do not mention the specialist in the report at all.
Really? Even if they were critical?
Yep. The report focuses on the auditor's overall opinion on the financial statements. Mentioning the specialist is only done under specific, less common circumstances.
Which are?
It happens only if the specialist's work or findings actually cause the auditor to modify their opinion.
Meaning not a clean opinion.
Right. So if the specialist's report leads to a qualified opinion or an adverse opinion or even a disclaimer of opinion, then the auditor would refer to the specialist's work in the report. And the reason for mentioning them then is specifically to explain why the opinion isn't clean. It points to the issue the specialist identified. But otherwise, silence.
So what does this all mean when we put it all together? I guess it means really understanding this interplay between auditors and specialists is pretty vital to appreciating how thorough and sometimes complex modern audits have to be. Whether it's valuing unique things like those diamonds or figuring out legal issues or complex tech stuff, specialists are key players in getting reliable financial statements.
That's a great summary. And going back to the source material from Farhat lectures, it really frames this kind of knowledge as a useful addition to standard CPA prep. It even suggests that mastering topics like this could potentially add, 10 to 15 points to someone's CPA exam score, which, as you know, can make all the difference.
Absolutely. That's a significant boost. So for anyone listening who's maybe studying or just wants to dig in more, it's probably worth checking out the suggestions from the source, like visiting the Farhat Lectures website, maybe seeing how students from your own university do on the CPA exam using their resources, or exploring other accounting and finance courses they offer, or even, connecting on LinkedIn, seeing what other students say. The material mentions risking $30 to find out if it helps. Seems like a small price for a potential edge.
This raises an important question, something to think about, really. In today's business world, which just keeps getting more complex, right?
Yeah.
Where this deep, specialized knowledge is more critical than ever for good financial reporting. How do auditing firms keep innovating? How do they make sure they maintain the absolute highest standards of independence while weaving this necessary specialized expertise into what they fundamentally do? That's the ongoing challenge, isn't it?